Hello, people. You're here with Sean Brooks, the realtor, aka the real estate guy. I am the administrator for the group, and I'm going to talk about why is my credit history so important. All right. So we'll go over the details that I wrote here. Um, so basically, credit history is considered when applying for a mortgage loan. Your credit score, also known as the FICO, helps determine the types of loans you can qualify for, and affects your interest rates. All right. Uh, so it's very important to build your credit, um, to get credit cards and pay those credit cards on time. All right. As stated before, I'm going to go over the reason why it's important um, to pay on time. And let me see if I can break it up. Um, let's bring that up here. And we're going to open up the PowerPoint. I'm going to go over with you the FICO breakdown, 5 parts to your FICO credit score. All right. Now, payment history, right? If you look at the pie chart, just take a look at this pie chart, right? It goes around for 100%, right? Total. All right. Now, 35% of your payment history, which means if you had a credit card for 5 years or 10 years, and you pay it on time, that history is 35% of the makeup of the score. All right. So you want to make sure you keep your history. Credit cards that you have for the longest, do not ever, don't ever cancel them. Always keep them. You might not want to use them, but you don't want to cancel those cards. All right. The amount owed is 30%, right? So I'm going to give you a tip. This is a gem. Write it down. Put down gem. Write down gem. Your credit card. Let's say the total amount that could be used is $5,000. Well, times that by 30%, right? And that's the amount that you do not want to go over. If you keep your cards to 30% of the utilization, your score will go up on a consistent basis, pretty much double digits for most part. All right. Now, the other thing is the other number that you want to keep in mind. That's a part of your score is length of credit history. All right. 15% of your score is the length of credit history. All right. New credit cards, new credit, right? Any credit, not just credit cards. Sorry. I want to apologize for that. 10% of your score, right? So you don't want to, you know, you want to manage the new cards, right? So that's when you apply for new credit only and only apply for that when you really need it. Okay. Types of credit, 10% again, right? Have sensibility of mix. Uh Visa, MasterCard, um, line of credit, uh, store cards. You don't want everything to be the same. You want to mix it. All right. These are the keys to credit. Okay. Um, and if you're able to manage your credit, your score will go up higher and higher. Right. Let's see if I got on this chart. Uh, oh, here we go. So you guys understand. Um, Credit mistakes, right? You don't want to, if your credit score is a 680, right, and you max your credit card out, the score goes down between 10 and 30 points. If you're 30 days late, uh, it goes down 60 to 80 points, right? That's under 680, right? Debt settlement, 45 to 65 points. Foreclosure, this is why it's key. And you can tell anybody that may be in that situation facing foreclosure. Your score goes down 85 to 105 points. Bankruptcy, it goes down from 130 to 150 points. That's under the category of your score is 680. Now let's say if your score is 780. you actually get penalized more for doing those things. Maxing out the credit, 25 to 45 points. 30-day late, 90 to 110. Debt settlement, 105 to 125 points. Foreclosure, 140 to 160. Bankruptcy, you get hammered, 220 to 240 points. All right. Just want to educate, just want to teach and make you guys more informed. All right. Any questions? Shoot them over. I'm here as a resource. I'm here to help you guys. I want to see more and more people become homeowners in the foreseeable future. All right. So you guys take care. Have a good night. Share this video with as many people as possible. Share the group.